Hi there. I'm Daniel Lader, founder of Lader CPA and Associates, and welcome to our new ongoing live series, Tax Strategies, right here, right now, where we are talking about great ways to reduce your tax bill and skipping all the jargon. And our first topic is quarterly tax projections and estimated tax strategies. I know that's a mouthful. I know that doesn't sound exciting, but trust me, this is a foundational strategy. We can build other cool strategies off of it, but once we have this one nailed down, you're going to have a lot more peace of mind going forward. So if your taxes feel like a surprise bill that shows up at the worst time, that's usually not a tax problem. It's a planning problem. So the goal is today to show you how to use quarterly tax projections as a strategy. So you know what's coming and you can protect your cash and avoid the April freakout. Now, why this strategy matters. Quarterly projections aren't just guessing what you'll owe. They help you to do several things. Make taxes predictable instead of scary. To make better money decisions throughout the year, not just after the year is over. Pick the right estimated tax plan for your situation, and to avoid the penalties and stress by staying ahead. So, our main strategy, you estimate, you choose a rule to follow, and then you run it on autopilot. Let's talk about all three of those parts of the strategy. So first, do a projection, your estimate. That will help you to make a decision. Now, a good projection is not just taking last year's income times a random percentage. It's not. It should help you to answer a few questions. First, if nothing changes, how much will I owe for the year? Second, if I change something now, how does it change my taxes? And third, how much should I set aside and pay so I'm not guessing? Those are the three questions a good tax projection will answer for you. So, a critical thinking question for you right now. Are you making business money decisions without knowing how they affect your taxes? So that's the first part, the projection. The second part, choosing your own payment plan. Now this one's harder than it sounds. So there's two main kinds of payment plans I'd like to focus on. First, the Safe Harbor. This is the peace of mind, sleep at night plan. It's not the best, but it's a good one. Now, this option, the Safe Harbor, your goal is to pay yourself enough so that you're not going to pay any extra penalties or interest to the IRS for paying too little. It's based on last year's income, and it projects and it takes last year's income and uses that amount in order to avoid penalties and interest. It's not the best plan, but it's a good plan. And if you still do it right, your April 15th bill will still be far lower than if you'd done nothing at all. So, Safe Harbor, your peace of mind plan, that's a good one, based on last year. Your second option is your true-up plan. Now, this is a much better, more accurate plan. It's more work, but it's more accurate and better for you. Now, this is the plan where you look and compare your real life, your real year ongoing. Every quarter or monthly if you look at it that frequently, but every period you're looking at how your business did for that period and taking that and projecting it forward to the rest of the year. The closer we get to the end of the year, the closer the projection will get to reality, but it's still going to be more accurate than the Safe Harbor plan, that first option. Now, every quarter you run your projection, you update your numbers with where you're at, and you base that on what actually is happening and current decisions you are making. Now, this requires that your bookkeeping be up to date, caught up, and reliable. If we don't have reliable, caught-up bookkeeping, we're still just guessing, and you might as well use the Safe Harbor Peace of Mind plan instead of the True-Up plan. So, those are your two main payment methods. Safe Harbor, good, helps you sleep at night, but not the best, or the True-Up. A lot harder, but a lot more accurate. Now, another question for you right now. Which plan do you think would be best for you right now? Both plans are good. Both have their own scenarios where they fit best. That's the second aspect of a good strategy for your tax projections and your tax estimates. The last one, the third one, is make it automatic. Don't leave the decision up to you every time, because I promise you, especially during a tough period, if you have to decide between putting aside some amount for future tax payments or spending it on some expense that is important, you're going to choose the expense every time. Every single time. So, make it automatic. Take that decision away from yourself. Your taxes should be treated a lot more like a normal business cost. Move money into your separate tax savings account where it's separate and harder to spend. Do it on a schedule too. If your bank allows for automated transfers, use that option. That way it's something you don't even have to think about. It just happens for you. And your projection, what we talked about in the last step, your safe harbor or your true up, your projection helps you pick the right percent or amount to move over. Now with your automatic savings plan, make it monthly, make it quarterly, which is best for you. You can still pay your quarterly taxes just fine if you're setting your money aside on a monthly basis. Another thing to remember with your automatic payments, match your payment plan to how often you get paid. If you're only paid once a month or maybe once a week, match your payment plan to that. So you're not scraping the bottom of your pockets to make that appropriate transfer. Now, if you're in the situation where you're receiving income on a daily basis, maybe make your schedule on a daily basis or a weekly basis, something regular and predictable that matches when your income flows in. Now, we talked about making plans to make your quarterly projections, pay your estimated quarterly taxes. Those are good plans. Now let's talk about the strategy side of it. This is where things get cool. When you are taking care of this every quarter, you're no longer reacting, but you're planning and being proactive with your taxes. So the strategies help us to stay ahead of those annoying penalties. And they make your goal change from, I hope I paid enough, to, I want to build my practice again. Now the goal is to build a plan that helps you make it harder to mess things up. Now, the best plan is one that doesn't make you dread every payment you're making. And the best plans help you to feel calm because you know what's coming for you, or you know what the future is bringing. Now, I'd like to give you a simple routine to follow on a quarterly basis, a monthly basis, whatever you prefer, but a simple routine to follow. Update your numbers throughout the end of each period. This is your bookkeeping. Run your projection off of those numbers. Again, whatever period you're keeping up on, monthly or quarterly. Pick the plan you want to use, either that safe harbor or that true up plan we mentioned earlier. Decide on the payment amount and schedule it. Don't leave it up to your own willpower to make that payment. Adjust your set aside percent for the future quarter and pick one action step based on what you saw. Your pricing, your spending, your pay, etc., and make a decision for that. So, that simple routine, put it in place. Change it if you want to, but have something, and follow that regularly. Now, a couple closing thoughts. Taxes are not the problem. Surprises are. And I promise, as a tax professional, that is true. People are annoyed with how much they pay, yes. But the big problems happen when that's a surprise. Now, quarterly projections, they will help you to turn, I hope I'm okay, into an actual plan that you can follow and stay on top of things so you're not falling behind, and help you make it more routine and not stressful. I have one last critical thinking question for you. If you could improve just one thing this quarter, would it be getting your bookkeeping up to date? Or would it be setting up your tax savings system to run automatically? Which of those two would you pick if there was only one at this point right now? Now, next week, we are going to be talking about the qualified business income deduction, the QBI deduction, and the tax strategies surrounding that. So tune in next week as well. And don't forget to like, follow, subscribe for future events like this or tax tips that we're regularly posting up. and visit our website, latercpa.com. Keep helping others to help themselves, and let us help you so you can do just